You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it's Thursday. It's time for TWIFO, This Week in Futures Options, the program where we break down what the heck is going on the other side of the fence, the futures options side of the fence. So maybe some ags, maybe some crude oil, some equities. So you never know what's going to make it. Metals, crypto, you never know what's going to make it on the tape. That's why you got to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Hope you guys are enjoying the slew of conference content that is hitting the tape for you guys right now. I've been talking to literally everybody over the past 7 to 10 days or so. It's all hitting the network right now, so I hope you guys are enjoying that. If you want a broad spectrum of what's going on in the world of options, we got you covered here, as well as a bunch of the panel audio coming from these conferences, too. So if you couldn't make it, we got you covered there as well. Just tune into the network, sit back, and relax. We have it all streaming to you over the coming days. And speaking of joining me here, coming to me, he came to us here in the studio yet again from his global travels, but he's back in the same time zone, indeed, right next to me here in the studio today, our old buddy, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to TWIFO. Welcome back to the studio, sir.
Thanks, Mark. It's good to be here.
You've been traveling. Give us a little bit of an update on your travels since the last time you spoke. You spanned a few continents, I believe.
I was in Europe not too long ago. I've been back and forth to New York a couple of times. Most recently, I was in New York this Monday. I was invited by CME Group, Tim McCourt in particular, to join him at the NASDAQ markets, and we had an opening bell ceremony for the launch of the micro futures that were launched on Monday. And should I say successfully launched? Very successful.
I have no idea who you're referring to, unless you're referring to our other guest here, holding down the CME Group hot seat right now. Appropriately enough, Mr. Tim McCourt, the Managing Director over there, Global Head of Equity Products at CME Group. Tim, welcome back to the program, to you as well.
Great, thanks for having me back.
Not quite as exotic of a location as last time down at FIA Boca when we were crammed into a hallway there, but I think we'll have to make do here. And I think appropriately enough, the markets are in turmoil right now. Volatility is roaring back, so I think it's an appropriate time to focus on some equities. What do you guys think?
Good idea.
Sounds like a good idea as well. Let's kick it off. Perfect. Sean, this kind of shows the perils of when we're analyzing things and getting ready for a program like this, because volatility came roaring back to life this morning. We saw, of course, over the weekend, everyone thought the trade war kind of a done deal. This weekend, nope. Curveball, not a done deal. Here's some tweets saying effectively that, you know what, it's not looking pretty good, and we're going to actually jack up the tariffs, go the other way. That, of course, scared everybody. Market selling off across the place. Dogs and cats living together, mass hysteria across the board. And then we got out into the second area there, of course, of the market switches have been interesting to watch as vol is, I'm not sure if you've seen this, John, but vol is actually started to come back in, which is, in fact, on the day, I do believe we are in negative territory for vol now. Have you seen that, Sean?
I did notice that today. It's quite an amazing run. So, yeah, definitely interesting.
Yeah, it's one of those things where they say volatility is short-lived in the space, and that is exactly exactly what we're seeing out here right now. Volatility, go figure. It's there, it's short, it's back, and then ever so briefly we saw VIX cash spiking over 22 ever so briefly. We saw the RVX catching a lift as well, up to about 24. So that was up. The VIX at one point was up about 8.5 handles from our last show, Sean, and RVX was up about 7.25 handles. So the Russell volume, it was a big move. We've seen that. So the spread got much tighter as a result, down to about 2.5 handles. That's the tightest we've seen it in quite some time. The spread between the Russell vol and the S&P vol, and then of course it has widened it out now as we're coming into showtime here. We're seeing the VIX at about a 19 even, off about 30-odd a third of a handle on the day. So we're actually negative on vol again. And let's see, RVX, if I can pull that up ever so quickly, sir, RVX at 22.11. So RVX actually vol staying surprisingly unchanged, given the fact that what we're seeing out there. So we're actually seeing that spread widen out again, up to about 3 handles again, which is kind of interesting. So Russell vol has been an interesting beast to watch of late, Sean, was what I'm trying to get around to here. But I think
small caps are of that nature, right? They, in terms of volatility, there's always that extra skew in the downside. It did flatten over the last 6-month period, but as the market stays volatile, that skew comes back.
A skew indeed.
So I think it's still there. So
it does come back, and Tim, I think this is an auspicious time to be launching a new equity product. Sometimes it's nice to launch new things when things are quiet because you get to make sure everything's working ahead of time, right, before they launch. But on the flip side, when you launch into a maelstrom like this, you get a chance to see some numbers. And that's pretty much exactly what we're seeing right now, Tim. These things have been lighting up the tape. I think so far, about 1.3 million contracts? Is that what we're seeing here on these futures?
Yeah, we launched the micro E-mini futures contract on Sunday evening, shortly after, the kind of tweet and the tariff statement, and we saw the markets react. And as you say, it's good. A little bit of volatility can certainly help a product launch, but I think going into it, I wasn't quite certain if it'd be helpful or hurtful. With launching a product when the markets were down almost 2% on Sunday night. was a unique experience, and I'm glad to say it was fantastic out of the gates. I mean, volume was strong Sunday night, all through the week. Monday was record volume we traded about 310,000 contracts across all 4 micro E-mini futures. And yesterday, it was 1.3 through the end of the day. And today we're doing about 550,000 contracts here, a little bit past halfway for Thursday. So already at 1.85 million contracts since launch on Sunday. It's certainly the most successful product launch at CME. And it's been fun to watch this week and exciting for sure. And the feedback from customers and our index partners such as Switzy Russell and Sean have been fantastic. And I think everyone is very pleased with how it's doing so far.
I have to imagine that's a little bit of a daunting prospect because you want a little bit of wind in your sails when you launch a new product. I don't know if you want a hurricane in your sails, though, right?
Right.
So yeah, I mean, we've touched on it before on the show, and maybe we're burying the lead here because we're so excited about the volume and what's going on. But maybe let's dial it back a little bit, Tim. Let's break down for some of our newer listeners what the heck we're talking about. What are these micro products? What are you listing them on? What are they exactly?
Yeah, sure. So it's always good to kind of just remind folks. The micro E-minis are equity index futures on the 4 major benchmark products that we have: the S&P 500, the Nasdaq 100, the Dow Jones, and the Russell 2000 indices. And they're just like the classic E-minis, in terms of offering all the great benefits of futures, being available nearly 24 hours a day, on CME Globex for trading. And the big difference is they're just 1/10 the size. They have all the other kind of same market structures with respect to tick size or minimum price increments. They're just 1/10 the size, making it a little bit more approachable for that average active individual trader to get involved in the global equity index benchmarks.
And what was the driver of this? Were you hearing from institutions that they wanted more nuanced contracts? Were you hearing from retail that we want smaller bite size? Was a little bit all of the above? What was the impetus behind launching these?
Yeah, it's kind of a little bit of all the above, but it really came down to is when we look at the active individual traders in the retail segment that's participating at CME, their growth at CME has been remarkable in 2018, and the need for finer risk management tools and tools to access the market has only continued to grow. So when we put it in perspective, if we look at the retail segment in 2018, it was up about 27% at CME year to date for 2018, where they traded over 660,000 contracts across all asset classes each day. Then when we look at it's a global story, right? It's not just a U.S. story. In Europe, the retail segment was up about 30% in 2018. In Asia, it was up about 36%. So the strong growth of this segment, that was really where we were seeing demand for this product, where given the long-run equity bull market that we've kind of been in over the last, decade plus, the index values have just kind of continued to increase, where it's just priced some of the participants out of the market in terms of the capital outlay in their trading accounts. So if we look at something like the S&P or Nasdaq E-mini contracts, those are about $140,000 contracts. That requires about $7,000 of margin, plus or minus. That's a hefty amount of capital for an active individual trader in their account, where at 1/10 the size, you're now trading a $14,000 contract and putting out about $700 in initial margin. It just makes it much more approachable, and it makes you a little bit less sensitive to the swings, either upswings or downswings of your position, such that, it's a more manageable risk, right-sized kind of risk instrument in your portfolio.
Sean, I know you guys have been watching this launch with keen interest because you guys have a product in this lineup after all. Walk us through what your thoughts are here on the early launch and how excited you are to maybe see some new papers, some new products lighting it up there in the Russell Lane.
Thanks, Mark. And Tim, just a congratulations to you and your team and CME Group on such a successful launch. Again, as this business transitioned to CME, beyond our expectations. And just a congratulations and celebratory applause for you and the team. In terms of,
thank you, Sean.
You're very welcome. In terms of product, and this being a slice for retail and also for those that are going to customize their hedging of options in much smaller bites, I think this product is incredibly complementary. It's also fungible, correct, Tim, with the bigger contract?
That's correct. All of these contracts are offsettable and can be collapsed. You can collapse one long E-mini against 10 micros and vice versa. So that's correct. They're kind of fungible and offsettable from a position standpoint.
So just a tremendous compliment to the already successful suite of equity products. And again, lots of focus on small caps. This is an opportunity for that retail sector to get into that small cap outperforming index that we have observed over the last couple of years. And again, it's a U.S. domestic play. It's got that kind of tariff insulation. It's just a great index, as is all four in this suite. And they're all complementary of each other. CME's doing a great job growing this pie, and it's nice to have Russell as a slice of that pie.
Have you been hearing, you've been obviously doing the road show for quite a while, going hither and yon, talking to institutional and some other players out there in the space. Have you been hearing the same feedback, that maybe people wanted maybe a little bit more nuanced contract they could sink their teeth into, smaller size, and also obviously for the active retail component out there? Have you been hearing the same thing? They would like something that maybe lines up a little bit more with their needs that you've been hearing as well, Sean?
Absolutely. And that retail sector is becoming more and more important to us as an index provider. So as I said, everybody continues to invest as they put money away and save and invest, and again save and invest even more. The market's just becoming more educated. And on the retail side, these regions, Asia and Europe, there's a real strong appetite for a retail size product like this, as Tim just mentioned.
I never heard of those areas. What are you referring to, Sean? Europe? I'm not familiar.
We've been talking Europe and Asia for the last several shows, how Russell volumes have been growing in the region. So
yes, on the after hours and the hours
Absolutely.
of those trading. So yes, it has been interesting to watch. Tim, the last time we spoke, I know you said that you kind of wanted to, obviously we like the options here, and last time we spoke you said you were kind of going to play wait and see with the options, see how these things launch. But I think it's fair to say you've had a robust launch for these products. Does that accelerate the timetable at all for adding some options and other things to these products?
Well, it's still a great question. I mean, it's hard to imagine that we would have had this success out of the gate, but it still is early days here on day 4 for the micro E-minis. We're focused just on making sure that this market and this new offering takes root and meets the risk management needs of our customers. We have gotten a lot of questions about options, so it's certainly something that we will continue to evaluate demand for. But right now, focus on the futures, no immediate plans for options. But like most product development at CME Group, it's in response to customer demand-driven requests. So we'll keep on taking those questions and work with our market participants and our liquidity providers to understand what's our capabilities to introduce options at a future date. But right now, focus on the futures.
I don't know, Tim, if you ever met an active retail options trader, but they want everything tomorrow. They want it actually right now. They don't want to wait till next week or next Tuesday. So when I get all the flood of emails from them, I will forward them to you, Tim, saying, here, ask Tim when the options are. How come we don't have the options? I'm going to hear that already. I can just hear that now. So I'm just going to get you ready for that flood of emails coming your way. Speaking of the options, let's get into a little bit here, see what's been lighting it up. We kind of mentioned the equities are kind of feeling a little bit of the heat from the reawakened trade war, that trade war vol premium. Was pretty strong coming into showtime now. Not as much. It has come off quite a bit. Let's start here in the land of the Russell, as we are wont to do. Coming in, it's off about 2.5% net on the week, right around the 1575 strike out there in Russell land. Vols, you might imagine, still net up on the week. We are still have a lift. It's off today, but net up on the week still. From a vol perspective. And where the action has been in the Russell 2000 options over there on CME, it's in the 1565 puts in the near term, going out tomorrow. So people looking for a little bit of near-term downside action. Not exactly surprising. The index has kind of been melting down for the better part of the week. So near-term in the weekly put action is not exactly some surprising paper. Let's see if there's more surprises in store for us if we head on out to the E-mini S&P and see what's lighting it up out there. The E-mini S&P coming into showtime at about a little bit shy of 28.75, about 28.74. Also off similar percentage, about 2.5% net here on the week. Vol, as you might imagine, up pretty strong across the board, even though, as you said, it is kind of coming in a little bit today. And with that, it's also near-term puts, near-term out-of-the-money puts, lighting it up with a day to go. Also in the E-mini S&P, we're at about a 28.75. It's the 2,800 even puts that are leading the dance here, also with a day to go out here in the big E-mini, doing about 71,000 of those throughout the week, with the lion's share actually coming yesterday, 23,000 yesterday, 21,000 today. So continued trade war concerns continue to light up downside here. Net opening of about 14,000. Again, we don't have today's numbers, obviously, so That's through Wednesday, and a decent amount of paper going up through Wednesday. So a lot of back and forth on that strike, but net opening positioning on the 2800 strike going into today's action. Obviously, there's a lot of stuff going on in the world of equities. Well, before we get some other products here really quickly, Tim, what else is up your sleeve there? What else is lighting up your tape there in the equity complex these days, sir?
Well, yeah, I mean, outside of micros, we're continuing to see strong volumes in response to the volatility we're seeing this week in the traditional equity index E-mini futures. That's great to see. A little volatility coming back in the market certainly gets things going, and we've seen that across the board. We're also seeing continued interest in some of our offerings around BTIC, which is our basis trade index close product. So just kind of as the market continues to move, obviously the implied financing and the basis between the futures and cash also becomes a little bit more volatile. So we're seeing that, the last few days, there's a little bit more action in terms of the basis between the cash and the futures. And then also, I think when we look at some of the news around tariffs, it also tends to kind of get things going on the dividend front when people are looking at their forward curves. So we're also seeing some good volumes, a few thousand contracts trading in our dividend index futures on the S&P 500. So lots of great stuff, but I think the common theme here is it's certainly the response function to the tariff news that's been kind of persistent in the news cycle this week.
That is indeed the case. All right, so you, Tim, you and Sean get to have a beverage and rest your throats for a little bit. But spoiler alert, we got some, I think, equity-oriented questions coming up in the feedback, so save your voices for that. I'm going to dive in really quickly here to some crude and a few other products that are lighting up the tape here this week. Of course, all this escalating trade war talk is going to get played out in the WTI and the crude oil space as well. Coming into showtime, we're seeing crude actually off on the week, so net off about not quite 0.5%. But right around the 61 3/4 levels out there after having threatened the middle 60s for a while there. That's, of course, on the heels of a little bit of a boost coming from a surprise decline in U.S. inventories here. So everyone thought that was going to jack it up. But then, of course, at the end of the day, Chinese demand and international demand is a big part of the story for crude. And with the trade war escalating, that demand seems like it may be in a little bit of limbo. So that's been weighing on crude, hence net down on the week. Vol actually up and up pretty firmly here on the week. In fact, if you listen, I missed last week's show, I encourage you to go back. We had Russell Rhodes, now of Tab Group, talking about crude premiums and volatility premiums and how they're a little bit more interesting than perhaps you might think. And certainly in contrast to what we see in the equity space, they tend to get more overinflated at times, remain overinflated for a little while. So if you're maybe wringing your hands saying, wow, these equity spikes of volatility are so fleeting, how do I capture them? Maybe crude oil is an interesting place to look as well because those spikes tend to be a little bit more overdone out there. So if you missed last week's show, I encourage you to check it out. And coming into today's action, let's see what's lighting it up. Probably won't surprise you listeners at the big action with WTI threatening the 60 handle again at about 61 3/4. The big print out here this week, the big option everyone is slinging is once again out here in the 60 puts. We're talking here in June, the June 60s, lighting it up pretty much all week with a big day on Tuesday, nearly 10,000 on Tuesday, 24, almost 25,000 total on the tape this week, about 4,000 today, 5,000 each Monday and Wednesday. Net actually closing, so a little bit of back and forth trading, it seems, slightly closing, not a ton. So a lot of back and forth trading on that even money strike, again, as you probably would imagine. Outside of that, let's look really quickly to see if any interesting aberrant prints going up here. Actually, the 50 puts coming up here also this week, also in AUG, were surprisingly active, doing nearly 12,000 contracts. The big day for those was Monday, 8,000 of those on Monday. So perhaps the 50 puts, maybe a 50 double put spread going up here on a ratio on Monday. We'll have to dig in a little bit more to find out. But the 50 puts out there, surprisingly active given everything that's been going on out here in crude oil land. Let's move on really quickly to the metals as well before we answer some of your questions. We talk a lot of metals here on the show. Usually it's the precious stuff. Usually that's what's lighting up the tape and catching our eye. I know if Nick was on, he'd want to talk all the shiny stuff because that man loves himself some gold. But the big story in metals lately coming out of CME and indeed on the futures options side of the fence has been copper. Copper has been lighting up the tape. You guys have been asking us about it when we had Blue Putnam on the show not too long ago. We asked about what's going on. You guys have continued questions about copper demand. I think Russell talked about copper last week as well. So copper's been kind of top of mind for a lot of people. It doesn't get all the headlines that the shiny stuff does, but it's still lighting it up out there nonetheless. In fact, of course, we talked on the show before that in Q1 there was a record volume for copper options over there on CME, just over 3,000 contracts a day. That's continuing to increase here in Q2. ADV now up to about 3.3 thousand contracts a day, so still kind of a pale shadow of some of the other big products, but for copper, that's a lot of paper. And let's see what's lighting it up out here this week. Copper right a little bit threatening the 275 level at about 277 and a quarter. The vol actually continues to increase, even though the underlying off a little bit this week, off about 1.6%. Not surprising. Much of the copper story is a Chinese demand story. And when we're once again threatening a trade war, that Chinese demand perhaps not looking so good. So copper taking a bit of a break, but not a huge one this week. Perhaps not as much as you would expect. And vol, again, kind of coming up here across the board with at about 277, the big print out here in the copper options this week. Looks like it's actually the 268 puts, and these are coming out here in July. The July 268, 2.68 puts, if you're not familiar with the strikes out here. They are a little bit funky out here, listeners. Going up with, again, the big print on the week is about 500 contracts. So we're talking a little bit of a different beast when it comes to copper, but still, overall, actually, I take that back. The 3 calls out here in September doing about 625. So that's the big print. So a little bit of upside lighting up the tape here. But in general, the net story is a continued growth, continued rise out here in all things copper. And since Nick's not here, he'll get mad at me if I don't talk a little bit of gold. So let's talk a little bit of gold right now very quickly. Coming into today, we've seen it. Gold still kind of hovering at and around that kind of 4-month low. We saw durable goods orders increasing and that kind of continuing to weigh on gold. Coming into show time today, though, is actually net turned up on the week. Let's see here. Where are we exactly? At about a 1285. Again, you guys can follow along. CMEgroup.com/TWIFO, TWIFO. That's where you can get all these reports that we're looking at. See all the data for yourself. If you did that, you'd see gold had actually turned up a little bit on the week, up about 1/3%, or about 4 handles to about 1285 or so coming into showtime here. The vol also up a little bit, which is kind of interesting. But again, that shows the skew in gold, maybe a little bit of a bias there to the upside. And in terms of what was lighting it up out here, the big trade looks like it's the 1,300 even calls coming here in June. 10,000 of those lighting it up. So an order of magnitude different than we saw out there in copper, obviously, listeners. So decent paper. The big day actually yesterday, 4,300 yesterday, 3,300 today, about 10,000 even going up total on the week. Slightly closing, actually, but we don't have today's numbers, obviously, so take that with a bit of a grain of salt. But a lot of action on this 1,300 even. Again, kind of like crude, the liquidity aggregates around these even money levels, 60 in WTI and 1,300 here in good old gold, all of the shiny stuff. Let's look really quickly. We like to look for some aberrant prints all the time here. You guys love it for the gold bulls, the funky spreads, the verticals, the flies that go up thousands of handles out of the money here in gold. Let's see if we have any of those lurking on the horizon. Remember, you guys can find those for yourself, listeners. When you go to cmegroup.com/TWIFO, wherever you log into Quick Strike, make sure you hit the select all. I know it's a lot of data. It can be overwhelming at times, but if you do that, you can find some of the crazy, shall we say, esoteric prints that are lighting up the tape out here. I don't see a lot of those going up this week, so it seems like all of our friends doing the funky upside flies and everything else in gold have taken a bit of a break. Looks like a 1405.85 vertical went up 2,000 times here on Tuesday. 2,000 of those, 2,162 to be precise. So that's maybe the big funky upside print we have to look forward to here on gold. Let's look really quickly. I'd like to break this down as well. Let's see what the big movers and shakers were for the week out here when it comes to all things CME Group. Again, you guys can find this for yourself, cmegroup.com/TWIFO. Let's talk the upside top 5 and the downside top 5. Again, this is just pure underlying movement. This has nothing to do with volatility or skew or anything. Just how much the futures have moved since the last time we all gathered here together on the show. To the upside, we got Eurodollar spiking up nearly 4%, taking the number 1 spot. Number 2, rough rice up nearly 3%, 2.99 to be precise. Number 3, the yen USD taking number 3 up 1 3/4%. Number 4, we've got I can't even read my own handwriting here what that one is, but up 1.4%. It's hard to see. In the 30-year, up 1.25%, taking in number 5 over there. And let's move on here to the downside. There we've got lean hogs taking it on the chin, off 5.33% here this week. Number 2, we've got also a yen product here coming in off about 5.25. Number 3, palladium, off about 4.6%. Number 4, we've got corn, good old corn, 4.33%. And rounding out the bottom end of the top 5, we've got soybeans off 4.25%. Some interesting stuff in the ags. I got some ag players on to dive a little bit deeper into the ags going forward as well. Meanwhile, it's time for us to dive very deeply into your questions. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the Futures Options Feedback. This is the portion of the show where you guys take the reins, your questions, your comments. You know how to reach out to us here on the program. Tim, I hope you got your question answering pants on. We've got some good ones. First off, it's kind of a repeat. We had this person write in a couple of weeks ago asking about dairy. And yeah, we'll get some more dairy info for you, Desanya. But the second part of the question I wanted to save until you were on here, Tim, because this is also up your alley here. Desanya here wants to know, is CME planning to list more crypto anytime soon? So I'm going to put that out there to you. I think we have, spoiler alert, I think we have a few crypto questions. Let me just lump another one in here for you, Tim, so you can answer them both at the same time. A related question we have from LDC, and this is, there are rumors that the CFTC is looking to approve Ether futures. Can we expect an ETH offering from CME anytime soon? So there you go, Tim. Right off the bat, a two-bagger of crypto questions. What do you got for our audience on the crypto front, sir?
Well, I mean, crypto continues to be a very strong and red-hot topic that people are interested in. And I think what's exciting about the Bitcoin futures offering at CME Group is that we're coming off of a record month. Last month in April, we traded just a touch under 10,000 futures contracts per day. And we had a record on April 4th where we traded over 22,000 futures contracts. And at CME, it's a 5 Bitcoin multiplier, so that's over 112,000 Bitcoin equivalents. That's quite a strong month, and some of that velocity of that market is also kind of hanging out here again the first few trading days of May. We have the Bitcoin price kind of breaking 6,000 last night. So it continues to be a very topical trade. People continue to turn to CME Group to trade the Bitcoin futures on the Bitcoin reference rate. And that's keeping us busy, right? We don't really comment on the product pipeline, but in terms of things that we're working on, we're continuing to focus on building the futures market for Bitcoin at CME. It's been just about a year since we introduced our Ether US dollar reference rate and real-time indices. So we're continuing to look at pricing products in the space. I think it was interesting to see that the CFTC had put out the request for information for Ether futures. I really have no information about the rumors out there swirling around with respect to Ether futures approval and things like that. But it's certainly something that we're watching and continue to engage with customers when we look at what should be next on the product pipeline. I would say the things that we kind of clearly have been hearing about since December of 2017 when we launched Bitcoin futures is that we're constantly being asked about options on Bitcoin, Ether futures, as well as physical futures and things like that. So we're looking at all these things with our customers. But right now, we're just focused on the Bitcoin future in the market, but certainly always willing to hear what customers want us to bring to market next.
Yeah, I imagine the recent uptick in all things crypto has certainly, let's say, maybe boosted some interest in that for you, Tim?
I think so, yeah. Where we continue to have a record number of large open interest holders in our Bitcoin futures contract, where it's right about 48 large open interest holders, which is great to see. and the contracts continue to kind of grow month over month. So yeah, I mean, I'm kind of curious to see where it goes from here. But obviously, as that price continues to move around, that Bitcoin future is here for those customers that need to manage their risk or want to get involved.
Yeah, you know, just anecdotally, we obviously have a crypto-oriented show now, so a lot of the questions go there. But how many people have written in recently to this show about crypto? Not as many, but in the last month or so, we've seen a turnaround on that. So clearly, the recent upsurge in all things crypto has lifted all boats. All right, Sean, I can see you've been fastening your question answering pants over there, so I think you're ready, sir. We got a whole slew of equity-oriented stuff here, so buckle up, sir. Let's start off with, I don't know, McIge, MCIge. You're the acronym guy, so I'll let you play with that one. He wants to know: has anyone ever put out an index with the top 5 or 10 names by market cap in the respective indices? Seems like you could get the lion's share of the move in the big indices like SPY or SPX with just a few names. Sean, this sounds kind of like some of those like FANG things, like the top 5 of the S&P. You know, but you're the index guy, not me. What do you have to say here for? Let's call him MCIge because it sounds funny.
Well, the answer is yes. There's small indexes, but in the derivative space, and Tim can probably comment stronger on this. But in order for there to be a derivatives contract, there's some CFTC requirements that the index be broad-based, and I think the smallest broad-based index out there is the Dow. It has 30 stocks in it. You know, we've got the Russell 1002 combined make the Russell 3, and then there's I think the Wilshire's got like 5,000 stocks in it. So from a derivatives perspective, a futures and options perspective, the definition of that qualifier is being broad-based. So again, it's something that to make a picture of the entire market rather than just a few stocks for investors. And I don't know if Tim wants to add to that comment.
Yeah, sure. You know, that's right. I mean, it's always an interesting question when we look at that. You know, people say, well, can't I just trade the top few? And is that kind of good enough? And Sean's absolutely right. When we look at some of the CFTC guidelines around futures needing to be on broad-based indices, the black letter is it basically needs to be more than 9 names, and there's certain things around the weighting. I think the Dow is one of the smaller ones in terms of components of the majors. But I'd say the other thing that I would add, though, is that there's other things out there with respect to some tax rules and things like that when we look at Rule 871M, where even if you kind of trade or create an index of like the top names or other things that you might run into to make sure the index is not overly concentrated in even the top of the top, right? So I think before I've been at CME for 6 years, and before that I was an equity index swaps trader on the sell side. So I'm a long-time lover of indices and a big fan. I think the challenge is, though, is if you focus sometimes too much on the top, you lose all the benefits of the averaging of the index itself, which there is some benefit to not being completely exposed to those outsized moves in the top. And I think we're seeing that even on up days and down days, that sometimes it's good to enjoy the diversification of the index itself.
Well, there you go, MCIge. Questions straight from the index guys here yourself. So there are those out there. There's underlying indices, but for things you can actually trade options and indeed futures on, not so much. They got to be a little bit broader than that. Look at Sean, all these questions. See, you go traveling hither and yon. The questions pile up for you while you're gone. N. Patel wants to know, can you explain the equity roll process? Who? I think it means why. Why market makers and traders do it? Maybe who? Maybe you want to identify individual people. I don't know. Why market makers and traders do it every quarter. This is kind of you talked about this before with the roll coming up with, of course, the Russell, the reconstitution. But the roll is a process that happens, obviously, month in, month out, as market makers have their exposures kind of adjusted, I think, to put it mildly there. Sean, do you want to regale here? Oh, this is an easy one. N. Patel.
Sure. And Tim, being the global head of equities at CME, can also chime in on futures contracts, but they're quarterly. So there's March, June, SEP and DEES quarterly contracts that expire each quarter, and those that want to maintain that exposure, being long or short, need to roll that position once those options or futures expire. So they roll them to the next quarter. So that roll and that spread trades as you get closer to that expiration period. And again, June is an exciting month because we do have the reconstitution of the Russell 2000 index, but there's that June SEP roll that will also trade as June futures expire. Those that want to maintain that equity position will roll into the SEP contract. But again, this is Tim's wheelhouse way more than it is mine. I'm happy to let him
Yeah, for sure. I think it's interesting when I completely agree with what Sean said. And when we look at the role, it's really about just maintaining that continuity in the index exposure. The way the future contract works when they expire against that opening print of the index on that third Friday in that March, June, September, and December months, that's not necessarily an entry point you can get in the futures contract very easily. The easiest way to just maintain the exposure if you still want to keep that long or short position is to roll it and to trade that calendar spread, because you can do that and advance from the first contract to the second contract without really exposing yourself to the outright index movement. So it's the cleanest way to maintain that continuous exposure without exposing yourself to the potential gap risk that might happen the morning of expiry by trying to let your contract expire and time when you hit that button on the screen. There's no way you're going to get that same exact level. So the easiest way to do it is just to roll it in advance. Now, I think one thing, right, Sean, you mentioned the reconstitution that's coming up in June. Is that June 21st? Is that right? When is that happening?
Yes, I think June 21st is the day. I got to double check.
Yeah, so I think that's always an exciting day and a lot of fun for market participants. So looking forward to see how the market gets ready for that this time around.
Raise the bar every June with record volumes. So yeah, we're looking forward to that this year.
All right, listeners, that music unfortunately means we've come to an end. I wish we could keep going for hours with this show, but I actually have to race off here to another conference. There's millions of conferences going on. Where do you think all this audio hitting the network comes from, listeners? It comes from me going hither and yon, bringing great people onto the network to talk to. But before we go, let me go back around the horn. Since Mr. Nick isn't here, couldn't join us, let me give him his plug here. Of course, Quick Strike, QuickStrike.net is the place to go, or Bantix, BANTIX.com. To kick the tires and light the fires, as they like to say. So all the things we talk about here on the show in terms of the implied vol, the trades, the big open interest trades, all the other stuff, the volatility, the skew, it's all there. You can kick the tires for yourself, cmegroup.com/TWIFO for the free version. And if you want to upgrade, quickstrike.net, QUIK is the place to go. And Tim, as our guest, you got a lot of things in your wheelhouse that are kind of hot right now. You got, of course, the equities lighting it up. You got the micro contracts in the equity space also lighting it up. And you got some crypto also lighting it up these days. So you've got some interesting wheelhouses. If you want to leave our audience with a little bit of a hint, a little bit of a tease of what they can expect, what they can look forward to from any of your various purviews over there at CME, now is the time, sir. The floor is yours.
Yeah, I mean, it's been keeping us busy. The micros has been a great best week ever, in terms of a product launch. Really excited about it. And I think, as we were saying before, I think the next things ever, we're coming into the June quarterly roll and Russell Constitution. So lots of things to do around total return futures and basis trade, index at close, and our favorite order mechanism, TACO, traded cash open. So I think lots of market opportunities to use futures as a complement to the rest of their equity risk management trading.
And in branding, you can't go much better than taco. You gotta like taco. I'm getting hungry already just talking about it. I missed lunch. That's probably why there, Tim. So thanks for making me hungry. But check it all out for yourself. CMEgroup.com is the place to go. Click on the equities tab, or indeed the crypto, whatever your flavor is that you're into, for more information there. And last but not least, of course, Sean, you guys are always out there traveling hither and yon in the land of Russell, getting the word out there about not just the big futures now, but you got the micros and the options. So a lot of things cooking in your wheelhouse. What can we look forward to coming from you guys and Russell there here in the coming weeks, sir?
Just to correct, the recon is supposed to close on the 28th, not the 21st.
28th, okay.
Yeah, we're excited about these micro contracts. The volume is very exciting to see. This catering to, I shouldn't use the word cater, but to provide a solution to that retail audience that has been asking for a product of this size, and the response from the client base has been tremendous. CME's just doing a tremendous job providing that product and service to a client base, and just pure testimony that they are listening to the clients extremely well. So one more time, congratulations, Tim.
There you go. You guys asked for it. You wanted some more smaller, bite-sized, more nuanced contracts. You got them, and it seems like you are responding with some gusto out there, trading them up. So keep it up, and we'll see you back here next time for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.